secondary market. So private lenders like us, I'm going to give you our picture from our side a little bit. So we are originating the loans. So the notes keep rolling to different hands. And this is 60%. This is actually the private market in the US is the one that's controlling the market right now. 40% are going into conventional banks and getting their mortgages from there, where it stays on the books and it stays on the balance sheets. And then in the non-QM private lending, the notes keep rolling into different hands. Some notes can go even, can be sold 5 times over, let's say, a 10-year term. So that's a big difference. So Lendi also selling them notes to securitization companies. And in this time today, those securitization companies have tightened up their rules. They want more due diligence. They want more documents. Everything became much, much harder. Like I said, the party is over. It's still going, and I'm going to talk about all the benefits of investing in the US, but not easy as it was. And so here we can see the rates of COVID times, all-time lows, where the prices were at all-time high. And then when rates went to all-time low and values went to all-time high, that delta in between was the perfect opportunity. And now we see how we see a very sharp increase. The Feds are meeting tomorrow. They have 2 big meetings. We're expecting another hike. We are expecting a second hike sometime around December. So yeah, that's the situation, and that's what we have to live with. And now the next one is about what we should consider, what investors should consider that's still going to make sense to invest. And the first one is to lock your value. So the discussion, we see how with seasoned investors, people that investing in the US, and when I say people, I'm talking about foreign nationals. I'm talking about people without SSN, without a FICO score. The discussion is not about locking your rates anymore. It's about locking the value before it might go down to maximize leverage. So there is always, many smarter people said it before me. You can't time the market, and sitting on the fence is also not the best idea. And so the discussion now is lock your value before it goes down. So I'm not saying it's going to go down in all the markets. The US is a very big place, and so some of the markets going to stay strong. Some of them we're going to see the decrease. We're already seeing that. The second one is tax benefits. So Lendi provides business-to-business loans. So the foreign investor is going to open up a U.S. entity. It could be an LLC or an LP, S Corp or C Corp, whatever it may be. And you should consult with a tax advisor before you do that. All expenses around the U.S. business loan are tax deductible. So you're going to pay the fees for closing costs. You're going to pay the title company. You're going to pay taxes. You're going to pay the appraisal company. And then all those are tax deductible. And so for the most accurate number, if you want, when you are calculating your NOI and ROI, you should calculate it after tax return. So, and that's where you're going to get the most accurate picture of your investment. The third thing, currency exchange, the US dollar, getting stronger and stronger. And that means that if you are purchasing with your own capital, so let's say you're putting 100% of your capital towards the investment and you're not going to use leverage, that's going to give you the benefit of, a strong buying power. You're going to go in, you're not going to wait in line. You're just going to get the deal. But then you're exposing all your Canadian dollar to that exchange rate. And so, Lendai is offering loans with US dollars. So where you need to put 30% down payment and take 70% leverage with US dollars, you're saving on that exchange. So these are the benefits that we see at the moment to invest.